Hi, it's Kevin Wright here with another property finance tip. So what are we going to be talking about this week? Well, we're out of lockdown, but how easy or difficult is it to be getting mortgages right now? So keep watching while I drill down to exactly what's going on with mortgages post-lockdown. So yes, we're out of lockdown, and what's it like getting mortgages at the moment? And the answer is, according to a recent report, not that easy. Why is that? Well, several reasons, really. Let's just look at a few of these reasons. Mortgage lenders have still got staff furloughed and their offices are not full. Now that means that their processing time is slower because they've got less staff working normally than they had before the lockdown. A typical lender that would take 3 weeks to issue a mortgage offer pre-lockdown is now taking 8 weeks to issue an offer. And that's not completing the purchase, that's just getting the mortgage offer out. The legals have still got to be done after that. So it's not quick. Another drain on mortgage lenders' time is dealing with all the people that are in arrears through being furloughed or made redundant, and also those that have taken mortgage holidays. So this is something that typically a lender isn't dealing with in the volume that they're dealing with now. Now that means that lenders are dealing with stuff in quantities and volumes that they're not used to. People are always getting made redundant, they sometimes get into arrears. That's not the issue, but it's the volume of people that are doing it now. And a lot of staff are having to be diverted to deal with that, which makes processing take longer. In fact, a stat I read was that in May and June this year, only 59% of mortgage offers got completed. And that's way down on this time last year. And high loan to values have been receding as well. Now, when lenders are under pressure, then they do two things. They jack up their rates and they jack down their loan to values. So in other words, they make their mortgages less attractive. With buy-to-let mortgages, what we've seen is 80% mortgages being launched by a lender, products launched, and then within a couple of days, it's gone again. So what's also fueling demand for mortgages is the stamp duty holiday. Now, it was introduced to give the property market a boost after being shut down for 3 months, and it's doing exactly that. And what's the outcome of that? Well, it's making mortgage lenders busier, which is making them take longer to process mortgages. Another post-lockdown feature of mortgages that's making them stretch out as well is lenders getting pickier, lenders asking more questions. So, are you furloughed? Have you been furloughed? Have you taken a mortgage payment holiday? If you're in business, have you taken a bounce back loan? So there's questions that didn't exist really for mortgage lenders pre-COVID that are now existing in the post-lockdown period. So lenders are getting pickier as well. Is all this bad news? Actually, it's a great opportunity, and I'm going to explain why now. So what does this all mean? Well, it means that in late summer 2020, then there's a fair chance that a mortgage won't complete before the end of the year. And that's not going to please many sellers, is it? But before you get too despondent, there's a ray of sunshine here. So if mortgages are taking much longer to process than they have done previously, where's the opportunity? Well, it's for investors that don't need mortgages. Who are they? Well, they're obviously cash buyers. So cash buyers have got a fantastic opportunity to cash in now and say to any seller, hey, if you want to complete quickly before the end of 2020, good news is I don't need a mortgage. But what if you're not flush with cash? What if you haven't got hundreds of thousands of pounds sitting in the bank account? Is there still an opportunity? Yes, I believe there is. And that's bridging finance. So bridging finance still completes within 28 days, which is why it's used so extensively to fund auction purchases. Now, if you're faced with a seller that wants to get a deal done and doesn't want to wait until the end of the year to do it, then you're in a great position, as long as everything else stacks up, of course. It needs to be a property that you can add value to and then refinance, or indeed sell if you want to. Being non-mortgage dependent right now is a brilliant opportunity. And there's going to be a few people that really make that count. And they tend to be the people that I work with and I've trained in the past, that understand the opportunity that bridging gives you. It's not scary because they know what they're doing, and having brokered hundreds, literally hundreds of bridging loans in the past decade, bridging is not scary for me either. So what have we learnt this week? Well, mortgages are problematic and they're taking longer to complete post-lockdown, but that presents a fantastic opportunity for those investors that are not 100% reliant on mortgages. Hey, if you haven't already subscribed, click that subscribe button, because I've got some great stuff coming up in the next few weeks. And if you want to make this the best year of your property career, then let's stay connected. Hey, now if you've enjoyed this video also, hang around a bit, because I've got something for you here. If you enjoyed watching this video, did you know every Monday morning at 8:30 I do a live Facebook Q&A. So if you want to start the week with checking out some answers to your property finance questions, click the link here.